Ladies and gentlemen, good day and welcome to Jindal Saw Limited Q4 FY24 earnings conference call, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Singh from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Good afternoon, everyone. Welcome to Jindal Saw Concall. Today, from the management side, we have with us Mr. Neeraj Kumar, Group CEO and Whole-Time Director, Mr. Vinay Gupta, President and Head Treasury, and Mr. Narendra Mantri, President, Head Commercial and CFO. Without taking any more time, I'll hand over the task to Mr. Neeraj Kumar for his opening remarks. Over to you, sir.
Good afternoon, friends. Mr. Rajiv Goel, who is the Assistant Treasurer in Vinay's team, he is also joining us and assisting us over the call. Welcome, friends, to our annual investor call. This year is one more time a best result over the last year's, which was then the best ever result. So we have now done twice in a row the best ever last year, to top it up a best ever this year, and on few parameters this year the result has been significant. Let me just take you through the highlights of some of the numbers. I'll very quickly run through the numbers because I'm sure all of you would have seen the detailed note which has been circulated by all. So, to start with, standalone first, top line 18,233 crores, EBITDA 3,226 crores, PBT 2,188 crores, and PAT 1,614 crores. Compared to last year, top line 15,704, EBITDA 1,630, PBT 938, PAT 715. Everywhere if you see, it's a breakaway. It's a significant improvement. Likewise, if you look at the console, top line 21,126 this year as compared to last year 18,061. EBITDA 3,489 as compared to 1,857 last year. PBT 2,216 this year as compared to 745 last year. PAT 1,593 this year as compared to 452 last year. Similar significant trend. One thing important to point out, Jindal Saw contributes around 85% of revenue in the console, 7% EBITDA. 7% EBITDA is by subsidiaries, so 92%, 92.5% EBITDA. And subsidiaries contribute 1.26% of profit. So pretty much 98.75% consolidated profit comes actually from Jindal Saw. So this gives us two clear indications. A, the subsidiaries are all now positively contributing, but in comparison to Jindal Saw, they are still a relatively smaller player. Also, you would have seen after the merger and the restructuring reorganization that we have done, we are pretty much left with now three major subsidiaries, one JITF, which is for the NTPC region, otherwise There are hardly any operations there, but we are just keeping the barges alive, running at break-even. We have an Abu Dhabi, which is 100% now, as allowed by the UAE government. And we have US, which is also 100%. So US, Abu Dhabi, GITF for legal reasons, these two being part of our core business. All known core businesses are out. Also, if you look at the subsidiaries contribution, 15% on top line, 7.5% of EBITDA, and 1.25% of the profit indicates that the subsidiaries profitability is still lagging behind what we have in Jindal Saw. Jindal Saw, actually, if you look at the EBITDA margin, if you look at the PBT to sales, they all are now a breakaway. It is a breakaway from the trend that typically Jindal Saw was in a band. So you can say now it is a reset Jindal Saw, where we expect the EBITDA to be, earlier we were expecting it in the range of 15, now we expect it will be in the range of 16, 17. Because there are a lot of initiatives that is being taken on cost control, on cost reduction, on innovation, on improvement, productivity. They are all now beginning to bear results. For example, now we have improved Cocovan, we have improved the PCI, which is a performance improvement in the blast furnace. And all these tidbits are adding to the improvement in EBITDA. Stainless steel is slowly moving towards more value add, so that it helps improve again the margin. So the margin, Jindal Saw now it looks like has moved away from its original band of 14-15 into 16-17. Another significant development that has happened, and it has happened in spite of NTPC still to reach its fruition, the ROCE has improved. The ROCE is now in the range of 20. That is primarily because there has been a lot of management attention on managing the capital structure, the balance sheet items, the investments and all of those. Now, if we look at the scenario where if NTPC goes the way we are thinking it should go, once that comes, then again a very large chunk of investment from the balance sheet of Jindal Saw will go out. Plus, Jindal Saw will have a lot of cash. So that could further improve the profitability, the quality and the health of the Jindal Saw balance sheet. So, all in all, it looks like we have entered a sweet spot which should continue for some time. Now, turning my attention to a few other things, the order book is a robust $1.5 billion, out of which export is 30%, domestic 70%. Industry distribution, if you look at oil and gas, roughly 30%, and water sector 64-65%, industrial 4%. We expect the industrial sector to catch up and grow further as our stainless business grows. I'm very happy to let you know that in our stainless, we have now successfully extruded 13 chrome Inconel, which are very exotic, and we would be the only one in the country who would be able to do that. So, order book very healthy. We have a clear visibility of First, order book, execution capability, higher capacity utilization, improving on our yield and productivity. Plus, we have a very healthy sales funnel. We do see a lot of opportunities coming in because we also are a firm believer that the government is going to continue. So there would be a continuity of government, and we expect that the momentum of infra development, where water sector is one of the key areas where the government is focusing, that focus will continue. So next, now 3 to 5 years, we do have certain confidence, we have certain visibility of good performance moving forward. The other area where a lot of attention has been given, and I have been talking about it quarter on quarter, is our debt. If you see, the debt seems to go down. March 24, we closed the total debt, means working capital plus term loan, 4,688 crores, which included 1,000 crores that we had taken for the acquisition of Sathavahana. And I am very happy to announce that this year we are prepaying the entire loan of that 1,000 crores, even though it was an acquisition funding long term. But now we have a strategy in place where we want to prepay. Already the prepayment has started April onwards, and during this calendar year we would prepay the entire 1,000 crores. So this 4,600 would come down to 5,600, out of which the working capital would be, say, close to 2,000. So debt is one thing that we are, and that is why if you see, yesterday when we declared our dividend, proportionately, yes, there was an increase in dividend to 200%. But if you look at in terms of the proportion to profit, it was not there. Primarily because as a company we believe that now is the time to conserve some cash, bring our debt down, bring down our interest cost, and improve the image and the credibility with the banks, so that the organization is absolutely in good shape, good form, fantastic relationship with all our banks, financial institutions, and cost competitive, as I said, improve ROC, improve EBITDA margin. So basically now we are readying the company for the next big leap in terms of market capture, in terms of growth, and in terms of strategy. One thing that I must point out is that, and we have briefly touched about, some of the subsidiaries, even though now they have turned profitable, there is some catch-up that they still have to do. And also there have been some extraneous factors. For example, if you look at the Abu Dhabi, or for that matter US, the Q4 performance versus Q3 performance, there is a dip. The primary reason being, you see, the Israel area has become a hotspot, which is kind of impacting Saudi, Iraq, and others. So the sentiment in that area, plus this time Ramzan was in the month of March, plus a few of our major projects in some of the countries, they had a delayed start. In US, a similar situation, Q4 results being less than Q3. But these are all temporary trends. We are seeing a trend reversal in Abu Dhabi and USA. So now we are confident this year the subsidiaries, even though they would continue to remain small in terms of the percentages, but would begin to contribute more. The raw material prices, if you see, we expect them to move in a current band. I don't know, between 100 to 120, but we don't import any. Domestically, we are able to source iron ore at $80, 5,000 to 6,000, which is a good thing for us, and we expect we'll continue to do that. Coal will remain around 250, and that should continue at least for the next 6 to 8 months is what our understanding. One thing that I wish to clear now to all my investors, if you see, we had taken a enabling provision of a QIP of 1,000 crores. And I had even said then that all our investors who take keen interest in Jindal Saw, please look at our management style in multiple layers. Getting an enabling resolution is only preparing for different scenarios. That doesn't necessarily mean that we have a transaction on the cards. So, I had also said then it is only enabling. Now, we have surplus cash. We are prepaying even the debt of State Bank of India, 1,000 crores. And I can let you know that now it looks like the QIP may not happen. On the contrary, yesterday, we have taken again an enabling resolution from the board, and we are going to take it to the shareholders, 1,000 crores of a debt instrument. Now, again, please read it as the management thinking ahead, thinking in multiple directions, multiple dimensions to orient itself, adjust itself, have an elbow room to move into different directions very quickly. Because in a developing market, where now India is asserting itself to become a manufacturing hub, we have to be agile. We have to be ready for, plan A, plan B, plan C. So again, I'm letting you know we have taken board approval. But again, please don't jump to the conclusion that we are going to raise that money. It is an enabling resolution that we have kept. We are looking at how things are shaping up. We have been active in M&A, we have been active in capacity expansion, new markets, new products. So we continue to remain focused, remain very vigilant, and remain committed to doing good business, improving the fundamental health of the company all the time. Going forward, if you look at the industry outlook, I have already said we only expect the Israel conflict should not spill over and should not disrupt the Middle East. It should not disrupt the Red Sea, because that would impact our shipping to that part of the world. But for that, at least India, we see very healthy demand in industrial, in water, as well as in oil and gas. All three are doing very well. In industrial, we are making a lot of effort to enter areas like space through our stainless and chrome oil and gas through our premium connections. Now the JHESL JV is performing well. It's almost having its plate full capacity utilization. Water, as I have already said, it is on top of the agenda as far as the government of India is concerned, which is likely to continue. We do see that now with the new government, where there should be continuity, we do expect a lot more alignment of thoughts, a faster economic growth, a consistent economic growth, and an all-round economic growth. Because the way the governments are coming out with the policy, the way they have set the target for 2047, even short-term targets, it looks like that government is going to be a bit more serious and come up with the economic policies which are much more aligned to growth. And that's all good news for us because we are at the core of infrastructure development and we will continue to be there. I think I have covered most of the high-level things that I needed to. Before I take questions, I would request some of the analyst participants, if you have a very granular, nitty-gritty question, Mr. Rajiv Goyal is here, he is taking notes. Just identify yourself and he would send you a mail. Because I may not have all the nitty-gritty questions readily available and we would rather like to answer you in full than to rely on my memory. With that, let me thank you all once again. Thank you for being with us. Thank you for being patient. And I hope that now the capital market should be more aligned to the growth in our fundamental strength. We still believe that there is a lot of headroom. Because if you look at any of the other parameters which drives the market, there is a lot of upside still available. That is what we believe. Even when we look at our peers, we do feel that fundamentally we are much stronger and the market has yet to give us the full, you can say, reward for what we have achieved over the last few years. So with that, let me stop. Thank you all very much. I will be happy to take a few questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Ria from Equitas. Please go ahead.
Congratulations on good set of numbers. My first question is pertaining to the Abu Dhabi facility. So we are seeing the sales war.
Hold. Would you please come closer? Speak a little slower in terms of your speed and louder so that I can be clear about it.
Sure. Congratulations on good set of numbers. So I was asking in terms of a UAE. Hello? Am I
you are asking? You are asking in terms of?
Hello? Am I audible?
Yes, madam. You didn't complete your sentence. You are asking in terms of?
UAE volume, sales volumes for the quarter. So we are seeing a little decline, and as per your opening,
I have already explained, yes. The last quarter, the sales volume declined.
However, in terms of order booking, we are seeing some good growth there. So where is the demand coming in from there, and when do we see the situation getting better?
Madam, I have already covered all those 3 questions in my opening remark. But still, okay, let me repeat it again. Fourth quarter in UAE was lower than third quarter. The reason being Israel, Ramadan, some projects getting delayed. I have already said Q1 there is a trend reversal and it should go back to where it belongs. This year again we do see that the overall volume should be higher than what we have achieved last year.
Got it. And in terms of other civil companies, they are saying that in terms of water projects, basically for DI, they're seeing decline in the projects. So are you seeing any such decline in the ordering activity in India specifically?
Okay, I don't know which companies you are talking about, but anyway, that's not important. On DI, now we have Samagoga, we have Hare Samundaram. We are running full capacity both. We are optimizing our capacity by adding the balancing equipments, where the capacity will be enhanced by about 10% or so, and we have our hands full. We are booked for most of the year.
Got it. And hello. In terms of expansion, in terms of peers, we are seeing a lot of expansion plans announced by the companies, and in FY25 and or the start of FY26, new capacities are coming on stream. So do you think that would be a situation of overcapacity?
No, the way we see it is they are all good news. The more the merrier, because in an oligopoly where if there are only a few players, sometimes the market can get skewed. So if you have more people coming into the market, it is always good news, because anybody who makes an investment makes a very genuine assessment of a demand, and that reconfirms our faith in our assessment of the future and the demand. Second, a latecomer always has a huge disadvantage in terms of entry barriers. This is not an easy market. So entry barriers, cost disadvantage. Already they have to deal with a build relationship that we have. So we welcome competition, but we are confident of ourselves, and we don't see that as a threat anymore.
Got it.
As told you, we are carrying out a lot of initiatives where we are optimizing our cost of production, which is already low, even further.
In terms of cost, coking coal prices have gone down significantly. So are we going to pass on the decreased raw material prices?
See, coking coal in our case will go down further, because we are starting our new battery. If you have been following us, last 2 years we have been working on getting absolutely brand new coke oven batteries. It is getting tested. It will get operational this year. That will have a further impact on the improvement of the power that we generate, which will have a cost saving, because we don't sell power, but it does impact on the cost side. The cost of production will definitely go down. So it is going to have an positive impact. Now, how much to pass on to the market is a market strategy. What is the price that is available in the market? But we definitely are making much more capable. We are making ourselves much more capable to deal with any new capacities coming in terms of our cost structure. Otherwise, as you have already seen, our EBITDA margin has moved into a higher band and shall remain there.
Got it. That's it from my side. I'll join the queue for further questions.
Thank you. We have our next question from the line of Shweta Dikshit from Systematics Group. Please go ahead. Ms. Shweta, are you there?
Hello.
Yes, please go ahead with the questions.
Thank you, sir. Thank you for the opportunity and congratulations on a good set of numbers. My first question is, could you provide any details of contribution from the hunting JV since it began commercial production last quarter? So, could you provide any number and outlook from the hunting JV?
No, hunting JV is a separate entity. When the results get published, consolidated, you can get to see that. Now, as far as we are concerned, as far as Jindal Saw is concerned,
yes,
as you know, we have to have an arm's length transaction. So the price at which we sell our pipes to the market would be the same price at which we will have to give the pipes to the JV. The only benefit that we would have It will be a large order, it will be an order of next door, and it will be an order where we will have consistency.